Hi guys, so I'm a little bit of a fangirl of the good old Mr. Musk, but this guy, Michael Burry, has put a massive short on Tesla stocks crashing. Now, if you know me, FOMO has been hitting me hard about Tesla since I started my channel a year ago. It's only worsened with one of my favorite YouTubers, Chicken Genius Singapore, constantly explaining through his Tesla stock analysis why we should buy Tesla. However, I have still sat on the sidelines and watched one stupendous rally over the last 5 years. And with the Tesla stock price returning 14.5 times more in the past 5 years. That's insane in the membrane, guys. So why is it important now to analyze Tesla stocks, and why should we care? And should you still believe in Tesla stock? And do you think Tesla stock will go up, or will it go down? Or should we invest in Tesla stock? So many questions. I'm getting hot flushes, guys. Actually, I'm getting hot flushes because we are having a heat wave. The frizz is real, the allergies are real, everything is just happening, honestly.
Sorry, was that another joke?
Was that another question?
But back to this, I really wanted to find out what all this negative hype is, and for all of us Tesla junkies, should we be worried about Tesla crash? So let's sprinkle those facts. And so for those of you who don't know, Michael Burry is one hell of a hedge fund manager, and he made one hell of a profit by predicting the 2008 subprime mortgage crisis.
And?
So when someone of that kind of legend status in the financial world makes a call, people really sit up and put their coffees down and listen. He's essentially making a call on Tesla, so we should listen. What call is he making? Well, he's executed out options worth $500 million on Tesla. Buying out options is essentially a bet that the stock, in this case Tesla stock, will crash. It allows Michael Burry to sell stock at today's price, but buy them at a future price once the stock has plummeted. That's madness. So he essentially would profit the difference from the Tesla stock price today to the crashed Tesla stock price in the future. Hypothetical, of course, but Tesla stock might not crash, and so no profit for Michael Burry. Boo-hoo. Now, from my research, Michael Burry is no fanboy of Elon Musk, like me, or Tesla, and has not really been a fan of Tesla stock for some time, but that's not new information. And what is shocking and causing ripples is the size of the short position. So Michael Burry has staked 40% of the fund's assets, Scion Asset Management, on the stock collapsing. What's the reason though? Well, fundamentally, Michael Burry is questioning Tesla's green credentials and attacking the legitimacy of the driverless vehicle claims. Now, a lot of short sellers have already got royally screwed trying to predict the Tesla stock crash. In fact, you probably need balls of steel to short Tesla, given how much short sellers have lost on Tesla in the last year. Research indicates that short sellers have lost in the tune of about $38 billion in 2020 alone shorting Tesla. That is mad, honestly. I found this particularly nifty graph that shows the major news stories for Tesla last year along with the stock price. If you or I were trying to trade the volatility, it is quite hard. The stock has trended up very, very hard. So why does Michael Burry think these two problems can't be solved by the god, the cult, the celebrity that is Elon Musk? But that's part of the problem, and the general problem with the US market overall. Inflation fears rife and better value in other developed markets like the UK. There could be some good justification in the Tesla stock analysis revealing that we maybe should be shorting Tesla stock, but let's take the two issues in turn. First of all, the green credentials of Tesla and why it's a problem. Well, Tesla's battery has received enormous positive press, and rightly so when compared to the benchmark it entered the market with. Tesla battery was and is quite impressive. Taking the Model 3, for example, which positions itself as a premium mid-sized vehicle, the Tesla Model 3 produces 180 grams of carbon dioxide emissions versus the premium mid-sized internal combustion engine, which produces almost 3 times as much. So if you are a car enthusiast, not me particularly, I drove a Yaris and now I drive a Peugeot just because it lets me fit 3 ISO fixes in the back, in case you care. But if you care about the planet, which I do, then the Tesla offers style and the best green credentials, and it shows in the Tesla sales numbers. So in 2020, Tesla sold 455,000 vehicles across the globe with a strong global demand. We also have the Model S, which beats a Porsche 911 to get to 60 miles per hour, which is also selling like hotcakes. So no doubt the car is good. The green credentials make sense. Yep, they do. But the message gets somewhat tainted when you look at the behavior of a company that is leveraging its green credentials. First of all, satisfying consumption is one of Tesla's key markets, which is China. So about 20% of Tesla demand comes from China. It's where 20% of the revenue came from in 2020. And it's likely that this will continue to grow both in absolute terms and as a percentage of their revenue. But China largely produces electricity from coal, which is not great for carbon emissions. And so cars produced and used in China are not as green as the packaging suggests. Just for you guys out there. And there is a lot more pollution than is being marketed. So get savvy, guys. The second rather foolish furor from Musk is the investment into Bitcoin. 1.5 billion in fact, which really doesn't help Tesla's green credentials. What does Bitcoin have to do with green credentials, you might be asking? Well, a lot actually. So Bitcoin is mined using huge amounts of computer processing power, which in turn demands a huge amount of energy. Now, estimations vary, but one figure I pulled from a cryptocurrency and Bitcoin expert is that it takes 72 terawatts of power to mine one Bitcoin. Let's break these stats down as simply as possible because numbers tend to just mess with my brain sometimes. So Tesla invested $1.5 billion in Bitcoin in January. So that would buy about 40,000 Bitcoin in January. The mining of those Bitcoin takes 3 million terawatts of power, which is insane anyway. And compare that to Elon Musk's statement last year where Tesla is planning to manufacture 3 million terawatts of battery capacity by 2030. It's just the wrong messaging, even for the simplest minds. However, these stories to me aren't really the determining factors to consider Tesla's stock price dropping. My gut says that the majority of us won't see this creating enough momentum to reverse the trend. In fact, Chicken Genius Singapore, who has been a god for YouTube Tesla information, cites that in his videos as well. So why does Michael Burry think Tesla's green credentials create a negative catalyst? Well, it's how the company makes money from its green credentials, which Michael Burry has picked up on. But let's break it down. So last year, Tesla made just over 30 billion in revenue, and about 1.6 billion of it came from selling carbon credits to other vehicle manufacturers. And this is where the makers that produce less carbon dioxide than their largest allocation can then sell the unused carbon credit as a profit margin of 100% to more polluting manufacturers. So Tesla made about £2 billion in profit last year, and very simply 1.6 billion came from selling its carbon credits, not its cars. Boom. And I think that is something that we need to just hone in on. The bulk of Tesla's profits was not because of its vehicle sales. Now, Tesla operates in a competitive market, so other car makers, they do know the financial situation of Tesla, and other car makers also know that buying carbon credits from a competitor at 100% margin is not a good strategy. It's a very stupid strategy. A better strategy is to produce greener vehicles and a diversified vehicle business to beat Tesla, which car makers are doing. Volkswagen, for instance, launched a new fleet of electric vehicles in 2020, and they're outselling Tesla in Europe's greenest markets. Now, reading deeper into this, I really was beginning to understand the genius of Michael Burry and the numbers behind his rationale. So Ford and Volvo have teamed up to reduce carbon dioxide emissions and hit climate targets while they're at it. And Stellantis, which is the combination of Fiat and Peugeot, are planning to reduce carbon credit spend as a key strategic focus. So the Fiat pre-merger accounted for about 16% of the profit of Tesla's carbon credit trading. Without Fiat, that's a mighty chunk of profit gone, guys. And the second point, driverless vehicles claim. Elon Musk is putting a lot of emphasis on driverless technology and of course the software that drives it. Technology has a huge sunk cost, guys, but then after that, market leading and industry leading software technology has very low marginal cost. Tesla technology can be sold for great profits. Musk likes to boast about it, particularly that driverless cars can boost efficiency because robot cars, particularly revenue generating vehicles such as taxis, can spend more time on the road. the same vehicle can generate higher returns and it can then effectively double its return. But Michael Burry believes that this is delusional for a number of reasons. First of all, the hours a car spends on the road doesn't determine its price. Secondly, software is not pure profit. It needs continued investment to stay ahead of the competition. And faults and accidents, including a fatal accident in Tesla, could destroy all driverless plans. One life lost to a robot is one too many, and regulations and standards could unhinge the whole autonomous ambition of Tesla. So that is the reality of it. The biggest reason, which is seldom accounted for, is the competition. So Google has clocked about 20 billion hours of driverless automation. Apple is working on its own driverless technology. Were Apple to join the race for driverless cars, then where will those fanboys go? I was thinking of Ali Abdaal here actually. Now, this new story about Apple joining the electric vehicle race is not without merit, and investment banking analysts do speculate that an Apple car powered by an Apple battery is not only the most credible challenger, but also the worst bear case for Tesla, with Tesla so far shaking off competition from existing car makers. But we have to say that will only take it so far. So where does that leave Michael Burry and his short positions? Well, that's one to look out for. But in the meantime, here are a few videos that you can check out to see what's in for the tech industry.